Dear professional students, you are welcome to another session of equity valuation and analysis. And under this session, we want to be looking at fundamental versus technical analysis. Now, when we are talking of fundamental and technical analysis, these are two major schools of thought when it comes to approaching the market, yet are at the opposite end of the spectrum. The two, the fundamentals and the technical analysis, they are the opposite, they are the variants. So investors and traders use both to research and forecast future stock price. That's the essence of this fundamental and technical analysis. Like any other investment strategy or philosophy, both have their own advocates and adversaries. And we are talking of fundamental analysis to start with. This analysis evaluates stock by attempting to measure the intrinsic value. Please note it. The intrinsic value. Remember the intrinsic value, the one that the Gordon dividend model tried to do. That is, market value is equal to dividend all over cost of equity. Or if it is dividend that is growing, it's a dividend plus 1 plus growth all over rate minus rate of the growth. Remember that we had dealt with this one in the past. So fundamental analysts study everything from the overall economic and industrial condition to the financial strength and management of individual companies. So the earnings, the expenses, assets, and liability are all come under scrutiny by fundamental analysts before they can determine what is the value of a particular company. Understand? So that is on that. And when we are talking of technical analysis in brief, this concept, the technical analyst, differs from fundamental analysis in that traders attempt to identify opportunity by looking at the statistical trends. Looking at what? Statistical trends. That is for technical analysts. But for fundamental analysts, they look at the intrinsic what? Value. And when we are talking of statistical trend, this statistical trend, such as movement in the stock price and volume, that is what the trader under this analysis, that is technical analysis, tries to look for. And the core assumption is that all known fundamentals are factored into price. As a result of this, there is no need to pay close attention to fundamentals again. That is why they try to look at the trend. So the technical analysts do not attempt to measure the security interest value. Instead, they use stock charts to identify the patterns. To identify what? Patterns and trend that suggest what the stock will do in the future. And this is one of the things that those that trade in forex, the foreign currency, the forex or forex exchange, it is technical analysis they use. When they identify the pattern, they can predict the movement of the currency or of the stock. So the popular technical analysis signal include the simple moving averages. That is the signal. It also includes support and resistance level, and also trend line and momentum indicators. Those are the signals in the in the technical analysis. Meanwhile, the fundamental analysis and technical analysis are the major school of thought when it comes to approaching the market. Understand? So, under this tech analysis, remember we mentioned what we know as moving average. And what is moving average? Moving averages are indicators that help assesses the stock trend by averaging the daily price over a fixed time period. Buy and sell signals are actually generated when a shorter duration moving average crosses a longer duration one. So that is about moving average. The next one is support and resistance. Support and resistance utilize price history, and support is defined as the area where buyers have stepped in before, while resistance are areas where sellers have impeded price advance. So the practitioner look at support and sell. Let me come again. I said practitioner look to buy at support, that is where the area where the buyer have stepped before. So they look to buy at support and they try to sell at resistance. No, resistance happen to be the edge. So that's that. The next one is trend line. So when I'm talking of trend line are similar to support and resistance as they provide defined entry and exit point. However, they differ in that they have projections based on how the stock have traded in the past. They are often utilized for stock moving to next high or next lows, and there is no price history. There are other number of momentum based indicators such as Bollinger Band, shocking money flow, stochastic and moving averages. You have convergence and divergence. Each of these have unique formulas and provide band and set signal based on varying criteria. So momentum indicators tends to use a range of band or trendless market. Now, let's now look at each of these in a bit details. That is the fundamental analysis. What do my fundamental analysis? Fundamental analysis analyze stock by focusing on the company's fundamentals. And what are the fundamentals? Let's ask ourselves that question. Fundamentals means earnings, debt, and other performance metrics to determine which helps to determine the overall value of the company and value of each share of that stock. So, fundamental analysis often employ ratios to compare different stocks, and this helps you as an investor or as a trader to infer the company's underlying value. For example, if a stock earns $20 per share, you may assume that the stock price will be twice that of a similar company that earns $10 per share. But this simple example scratches only the surface of what you can do with the fundamental analysis. For a company that earns 20 and for one that earns 10, you can see that it is double. But there are other things that you need to put into consideration before you make such analysis. And when you analyze a company fundamentals, an investor might have to make some assumptions. For example, you could assume that a company revenue, you can assume the probability and even dividend growth rate to estimate the value of a share of stock. So the investor use formula like capital asset pricing model. I think you have not forgotten that, which is the return on equity is equal to risk-free plus beta into return from market minus risk-free return. That is a CAPM. And also, they also make use of a discounted cash flow for them to know the value of a stock. And we also have ratio comparison and many other formula and models to make their own predictions. But one major proponent of fundamental analysis investor is this man, Warren Buffett. So it's used the fundamental analysis as part of picking the stock value in his portfolio. So if, as an individual, if you believe company financial performance is the major driver of the company's value, you should focus primarily on fundamental analysis when picking investments. That is the rule behind this fundamental analysis, where you know that the financial statement of a company is actually the major driver of the company's value. So focus on fundamental analysis when picking your value, because it's from financial statements you know about the profit, the earning per share, earning ratio, about dividend, about a lot of things that you need to know for you to make an informed decision. Now, what are the popular tools for fundamental analysis? Let's look at the popular tools for fundamental analysis. Now, when I'm talking about popular tools for fundamental analysis, we have price earning ratio, that is price to earning ratio, often called PE ratio, and this one compare the stock. Compare what? It compares stock prices based on the company's earnings, and as the name implies, this ratio divides the stock price or the stock price by the company's earning per share, and compare this ratio with other stock in similar industry to get an idea of where a company's stock price should be in relation to its peers, that is in the colleagues in the industry. That is price earning ratio. Another one is earning per share. So earning per share is a simple calculation that tells you how much a company is earning per share outstanding, and simply divide the company's earning by the number of shares. That is earning, which will mean profit after tax. That is earning divided by number of shares outstanding. That's the earning per share. Now, the most financial websites provide this number without you having to do anything. If you want to calculate any per share, they will give you the any per share. You might not need to trouble yourself. So the next one is PEG ratio, and the PEG ratio shows the price earning ratio with respect to the company growth rate. The companies that are growing fast are likely to watch more in the future than the one that is growing slowly. So the PEG ratio takes growth ratio into consideration. The next one is book value or book value per share. This is one of the conservative measure of a company's value. Book value look at what a company will be worth if it were liquidated today, and if its stock price is lower than the book value per share, there's a good chance that the stock is undervalued. If the stock price is lower than the book value, is undervalued, and when it is higher than the book value, the company is is overvalued. I think we have said a lot regarding this. So the next one is what? Is return on equity. So return on equity is a percentage calculated by what? By dividing the company net income. The company what? Net income by the shareholders' equity. And the shareholders' equity is simply the company's total assets minus its liability. That is on that. So these are the tools we use in fundamental analysis for you to make an informed decision regarding what's supposed to be done in the area of stock picking. Now, let's look at the pros and cons of these concepts, which is financial analysis. When I'm talking of pros and cons, the advantage is that this analysis is based on company financial performance, and it is also ideal for long-term investment and uses common metric built into most popular brokerage performance. I said it is based on company performance because it is company's book we use in getting all the facts you need regarding the fundamentals, and also is an ideal for long-term investment, and it uses common metric built into most popular brokerage platform. That's the advantage. But what is the disadvantages, which we know as cons? First one is that asset value are typically based on the past financial results, and not only the asset value, that financial statement that you believe you can get all the fundamentals for you to determine either to pick a stock or not. They are what? They are historic in nature. They are historical in nature. They are past financial results. So, and it is not certain that the past activities could be repeated in the present, although that's the belief. That's the belief that what they have done in the past will be repeated, but it's not certain. That is one. Another cons or disadvantage is that target stock price are often determined based on the company peers, and also assumption that they can make results subjective. That can make the result subjective because you consider with the peers and you don't know the condition in their peers. What made the peers to be like that? The situation might be different in the company you are observing. That is on that. And the third one is that main numbers are updated only quarterly. Main numbers are updated only quarterly. That's why you have the quarter result, the quarter this, quarter that, which is not best for this analysis. So that's about the fundamentals. Now,